From the 2013 Spring Roundup, Aaron Waller, looking past the weather market.
So now we want to introduce our lunch speaker. We have Aaron Waller is coming to speak with us, who's an ag economist in Natural Resources Conservation Service. And he is going to talk to us about futures prices and what it looks like, where commodity prices are going to be for us. So I'd like to welcome Mr. Waller. Thank you.
I'm Aaron Waller. I'm an ag economist with the Natural Resources Conservation Service. It's good to see y'all, see some familiar faces. I appreciate the college inviting me up today to talk about something I'm kind of keen on. I get to work with prices of all sorts in my work. I do a lot of farm budgeting, budgets for conservation practices. So we have thousands of conservation components that we look at, you know, everything from wire or fence posts or concrete that we may use in a conservation practice. I've always had an interest in commodities, so I'm going to kind of focus on that here today. You know, it occurred to me that, you know, my grandpa or even my dad, when they took animals to the market, you know, they were price takers. You know, they decided the day and they took them in and they got the price they got. And I think now we're becoming more sophisticated, and I imagine you're probably going to hear a lot in the other sessions about using some of the tools available to us, forward contracting, futures, options, those sorts of things. I'm not really going to talk as much about those tools, but really just look at what affects prices itself. And really I'm going to take a broad perspective, national, really, and international. So we'll get, it's not going to be just about Wyoming. You know, prices are so important to risk management and to profitability. We really, of course, want to buy low, sell high, and not the opposite. It certainly plays into the vitality of our communities and in the ag sector. And really in my business of conservation, we know that it's profitable producers who really come in and talk to our conservationists and help us put conservation on the ground. That's really important, that conservation involves profitability before, during, and after the installation of that practice. We're going to talk about wheat, corn, and cattle today. These are what I would call market leaders. I realize not everyone here is growing these crops, or probably a lot of folks have some interest in livestock here. A couple reasons why I chose these three is there's good information on them, and you all can get that same information. I have no special access here to information on markets or prices or trends, so I'm in some ways trying to encourage you to kind of, you know, think broadly and become good decision makers, good risk managers, and help to improve your own profitability. Just some examples of really good market information that I rely on. A couple of universities and some you probably are familiar with. Ag Manager, Farm Doc, DTN of course, and AgWeb are just some keywords that you can use to search out these sites. They have great analysis, great economists and agronomists who look at a whole range of crops and livestock issues and provide good information. I'm sure many of you get the Progressive Farmer or Farm Journal magazine. Just a point about that, I do as well, and I encourage you to read those magazines. There's good information in there, but that good information is on their website 3 weeks prior to you getting your copy in the mailbox. That's just something to keep in mind. I think in this day and age, information is, to the timeliness of it has become very important, because that, you know, after 3 weeks, it actually may not be that current or useful anymore. And so I encourage you to read the magazine, because that's probably some high points, but also to check out their websites and look at other sources. You've probably seen this picture. This is the drought monitor. A new one came out today. I doubt it looks any different. This hasn't looked different since early September. So I could have put up the September 4th version of this and you wouldn't have known the difference. And that's a serious situation. So I guess in some ways, if this is what you need to know to market or to purchase inputs this next year, it's kind of a simple story. Unfortunately, it's not a very good story. I'm sure if this continues, if this is the picture in 4 or 5 months, there will be some folks out there who have some profitability. But I think as a sector and as an agriculture, we're going to lose customers. There's going to be some reckoning that we're going to have to deal with this. So I'm really going to today kind of perhaps propose or perhaps help us think, well, let's set this aside. If this weather market continues and strengthens, I mean, that's going to be a driving force that's going to make many of the things I talk about today probably irrelevant. But certainly this is important. Several themes today. Markets don't move in one direction. And so we're going to look at a lot of charts. I hope you like graphs. Micah asked if I could be funny today, and I told him I'm not really a funny guy, but I do have graphs. So I hope you like graphs. But we have to remember they don't move in one direction, and the longer they do move in one direction, that's where I sort of start looking at them a lot closer. There is substitution, especially in the ag sector. This year, we are substituting a lot of wheat for corn in livestock rations. Normally, we feed 3 to 4 million metric tons of wheat in the United States. This market year, we're going to feed 10. So that's an example of substitution, and we'll play into that in here in a minute. Thirdly, I'm really interested in what's going on in other places around the world. I think we increasingly have to be aware of that. 10 years ago, and certainly 20, it didn't really matter. The United States was such a key player in so many commodities that if you understood the domestic market, you could be an effective risk manager and you could be profitable. And that's just not the case anymore. So we're gonna look abroad. So this is a chart. It's a daily chart for the harvest month. July 13, hard red winter wheat, Kansas City contract. So I just use this as an example, something we can look at. Kind of go back a little bit in time and kind of think about some of my themes. You see, we're cruising along here, and this is a year out from when this contract matures. Here we are right at the end of May 2012. Well, we actually had a pretty good wheat contract, harvest last year, wheat crop. We got some rain early. Southern Plains had rain. It wasn't a bad crop. It was a decent wheat crop across most categories. So we had a decent wheat crop, and we were here, and we had this quite substantial bid under this contract, which is again a year ahead. So what's that telling us? I think this really speaks to that substitution. This is where we realized, the market realized, that all that wheat was going to go into all those feed rations. This is when we knew the corn crop was in trouble. So even though this isn't about corn, this is a wheat chart, we see substitution here. We also see probably, and then a little carrying on in that upward trend when we realized global stocks were really kind of had taken a hit in 2012. And we'll talk more about some of the areas of the world that had poor crops. Finally, we get up here right before the holidays. We're cruising towards $10 if that continues, and you sort of see that third theme come into effect. I think the market just got tired. There really wasn't anything more to carry that contract up higher, and it faded because it needed to. And I'm not trying to personify the market too much, but I really believe that it works like that. I mean, you can't continue an upward trend forever without releasing some of that pressure. If you look at the global picture on wheat, I am not as interested in who purchases wheat, because it's usually the same crowd. It's North Africa, it's Asia. They all need wheat, and they're gonna get it one way or the other because they have to feed people. Of course, wheat is a really important commodity because it is such a basic source of food in the world. What I am interested in is who's exporting it, because that's where the play comes out. And that's where we really have to realize, well, we're a big exporter, maybe a quarter. Again, I've got a 3-year average. But there's some other players as well. Canada, Australia, former Soviet Union. It's actually second to us in terms of exporting wheat onto the world market. So if any one of those pieces of the pie has a crop failure, that's something we need to pay attention to. That can put a bid under the market. Australia, it's got a pretty active areas of wheat. They were down about 25-26% year to year, and they just had their harvest. So that's an example of an area in the world where they're not putting a lot of wheat on the export market, so someone else has got to pick up the slack. This last year, just an interesting statistic, the global wheat production fell the most year to year that it had in 21 years. So we had really what happened in 2012 in our season in the Northern Hemisphere. The former Soviet Union had a poor crop, and Australia came in behind it with a pretty poor crop. I mean, substantially down, like 20 to 30% less than they had the year before. So our wheat stocks globally are lower. I'm very interested in what's going on in the former Soviet Union. It's not an area where we can get good information, but they're becoming a player. Again, 10 or 20 years ago, they were growing wheat for themselves. Now they're active exporters. Ukraine, Kazakhstan, Russia, areas of the world that we have to keep an eye on. The Foreign Ag Service is a branch of the USDA. They try to do that. We don't get good information. That's the problem. So you have to really dig for it. Again, in 2012, this area had a very poor wheat crop. They did as well in 2010. So they've kind of been fluctuating up and down year to year. And they're learning about the whole information game. You'll find that they've learned that sometimes it's better for them not to talk about their poor wheat crop. And that makes it harder for us to analyze it. And I think this is my last chart here on wheat, and then maybe I'll open it up for any questions. Just to kind of really look at the long-term view here. This is done by Dan O'Brien at Kansas State, and I really like his work. He does great charts. Again, looking at annual average prices. Again, this is I think this is across all wheat classes. So you'll see here we're at an $8 in this market year. In the 12-13 market year, that's a USDA number, I believe. And you see a price trend line that's swooping through there that Dan has calculated. And you see in some years we're above that trend line, some years we're below it. I guess what I would point out to you is what happens when the prices go up at the top. It's not necessarily a spike, and that's interesting to me. The idea that it kind of levels off, and even here recently, it levels off or flattens out before it declines. And supply and demand is in effect here. So as prices go up, more people presumably grow wheat if they can, and you have a higher supply or greater supply, and the price goes down. So it's a normal sort of relationship. But I am very interested in what happens here at the top. And we'll look at a corn chart like this later, and you can compare it. Is there any questions on wheat? Anyone got any questions on some of these things?
Well, I know you're using wheat as a proxy for our production costs for cattle growth. But what about, if we may get to it, the cattle prices and the projected demand and supply for cattle, beef?
I don't know if I'm going to project prices for feed or forage. I think that's probably something that would be worthwhile. The third part of my talk here is about cattle, sort of big picture. So, but I mean, I started here. I think you'll see it kind of builds through. I think you're onto it. I think you see what I'm trying to do. So, anyone else? Corn is such an important crop worldwide. It's the most commonly grown grain quantity-wise. I mean, we're going to be growing, 1 billion metric tons of this grain worldwide. Not too far away. It's the most traded commodity in world markets. I think if you're in the livestock business, if you're not feeding corn, you're substituting for it. And of course, it plays into fiber and fuel and pharmaceuticals. It's an amazing crop, and so we have to talk about it. I think important to think about demand first. you know, the demise of the ethanol industry or the pork industry in the United States, I think is a little bit overrated. I don't think those industries they may have pulled back because of high prices, but they're going to be at the door demanding corn as soon as it hits a price that works for them. And I don't think that's too far lower than where we're at now on a cash basis. I really believe that. So they've pulled back a little bit. There's a few ethanol plants that aren't running at capacity, but I think those two sectors, I mean, I hear people have talked about they may be, you know, contracting on a large basis. I don't really buy that. I think they're there, they're waiting, they're going to be demanding corn. And certainly our export market will as well. And that's one of the reasons why you could see 100 million acres of corn planted this year. Now that's probably a record. At least a modern record. I don't see any reason to disbelieve that we're not going to have huge plantings of corn. It is a profitable crop. Farmers like to grow it. They kind of took it in the shorts last year, so I think they're going to double down and make it work this year. I think it's almost a personal thing for farmers who grow corn. And so we're going to have some acres because, again, you look at the profitability, the budget for growing corn, and it is favorable. Yes, sir.
Will that reduce the amount of feed acres to increase?
You may have some moderation of the soft red winter wheat that's grown in the Midwest because often they'll go soft red winter and then into soy. So you may see if those guys are going to stick with corn, they got to get the corn in early. But not overall, because about half of our wheat in this country is hard red, so it's going to be Southern Plains, and that's not really corn ground. So I don't. You get a little bit of intermixing in the Midwest, but I don't think so. So this is yield. So I think we're going to have the acres. I think a lot of people do as well. So the question is, what's our yield going to be? Of course, the story from last year is that we had this just abysmal yield. I think it's like the average yield for the entire U.S. was like 123 bushels to the acre. So way off trend. Trend is 160 plus, or nearly that. So we had a what might be called a disastrous yield. And this chart is from the Freeze Notice weather site, and I brought a little article that they did, and it's interesting to me, so I'm going to share it with you. So they asked the question, one of their analysts asked the question, well, what about these years where we have a disaster? And I've circled some on here that you might consider a disaster. I mean, we had a huge yield drop one year to the next. Most of those are dry years. They're not all, though. There's some too wet years in there. You go back, and this is sort of back to 1960s where we have good data. They went back even further. They said, well, what about back to the beginning of to the 1900s, essentially? And he came up with a total of 13 disastrous yield years for the national corn yield. So you see the later ones here. And he asked the question, what happens the next year? When we've had a disaster, so we're off either 15% off a trend, or it's some other measure on the older years. And I found his answer, or their answer to this, very interesting. And their answer was, a year with a national corn yield disaster has never been followed by another year with a national corn yield disaster. So if we go back to when we've been growing corn in this country and we have a record, it's a one-year event. Does that mean it won't happen again? No, it does not. But still, it's interesting. And just a little more on what he said, not only are corn yields in the year after the corn yield disaster better, in most cases they were a lot better. So maybe that's technology. Maybe that's farmers adjusting. Maybe it's just the fact that you don't get a national drought like we had last year and have that persist to a second year. It's just very unlikely. So that's a little history. That's the evidence. The 13th year was last year. So we don't know what's going to happen 2013. We don't have that. But in every of the other 12 years, according to, again, these gentlemen, anyone wants to take a look at this, I can refer you to it. I found that very interesting. That's encouraging to me. That makes me a little less anxious about that drought monitor map. Another chart here, daily settlement on December. This is a harvest for harvest 13, harvest month, December 13. So this is the big contract. I guess it's worthwhile to think about, a couple of the different price levels you see here. Obviously, we were sort of down in the low $5 a bushel coming into, that real dryness that persisted over most of the country. We bumped up here on this contract into the mid to high sixes. Certainly on the harvest month for 2012, we were pushing 8. And now we're down here in the harvest contract, we're just a little below $6 a bushel. So I think as a producer, as a risk manager, when you're thinking about your profitability, you need to be thinking about December 2013. What's your bet? Is your bet that we're going to be in the high, we're going to be able to get a $7 on that harvested corn, that new crop? Or are we going to be down here at 5? Or is 6 going to cover your costs? Kansas State University has, in several of their economic analyses, determined that there's an 80% chance this coming year that the corn crop will be at trendline yield or higher. 20% probability that it will be below. That sort of goes along with what the freeze notice people say. It's a little different approach. So to me, translating that's a 20% chance that you're going to see those high prices on this harvest. And there's an 80% chance that you're going to be at $6 or below. So that makes me think that if I can lock in $6 on my new crop corn and cover my costs and make some good money, and I think you can, that may be good risk management. And maybe you leave some of those bushels to play with, but I think we just got to keep in perspective of the history and I think really the capability of the American farmer. And this is a big deal. This really is a big deal because, again, for the livestock guy and gal, we're going to talk about livestock, and obviously feed availability and feed price is a huge deal right now affecting livestock producers. Is there any questions on this part of corn? I got a couple more slides on corn, but this is kind of an important issue. Yes, sir.
I got a question on corn. You said you thought that ethanol would come back in and support it at levels lower current levels, or are you talking at December contract levels? And when it comes to ethanol, is corn the driver, or is the oil price the driver?
Great question. I've actually done quite a bit of work with biofuels, so I'll give my shot here. Cash corn right now is north of $7.50, probably higher in some places. So corn is, if you've got corn now, you're sitting pretty. You can get good money for it. I think that's really caused the ethanol plants at that price. They can't really turn it into distiller's grain and alcohol very profitably. But you get down to around 6, I think they can. There's no doubt that they can, from what I've seen. So they have idling capacity. They're waiting. They're hoping for that big crop. They're hoping that this contract turns out the way we see it now. It is what it is in December. And the oil part is that crude oil today I think is $96 a barrel. Now, 3 or 4 years ago, if you said $96 a barrel for crude oil at the end of January, I think people would have been freaking out. For some reason, we're not freaking out. And that's kind of scary to me because we're about ready. I mean, if you're a producer right now, you should be, diesel is probably about as plentiful as it's going to be. As you could move out from this point, a lot of the analysts who work with cooperatives say, your ability to contract for diesel is going to get a little harder as we move from now through spring because that stock of diesel, which has grown during the winter here, is going to start getting drawn on. So I think there's going to be plenty of reason to, we have a mandate for ethanol. We got nearly $100 a barrel oil now, and there's not even anything blowing up in the Middle East. And I think, again, if oil blows up, the ethanol guys are going to be fine at $7.50. Right now, they probably want to see a little, but they're still making ethanol. We haven't cut that much production. So it's, I mean, partly that is that the distillers grains is such a big part of the picture. I mean, a lot of people consider those ethanol plants really to be feed factories that produce alcohol. Yes, sir.
On these prices, you're looking at bushel prices?
Yes, sir. Yep, that's a futures contract in Chicago. When I pulled this yesterday, $5.90 a bushel was the settlement. That might have been from the day before. And that's on a December 13 contract. If you were to look at the March contract, of course, that's way high, 7 something, 750, 760. Of course, there's no old crop corn. There's very little of it. Again, this is projecting those big acres, and then we'll get closer to trendline yield. But if we hit those big acres and we get near trendline yield, the projections are that you're off the bottom of this chart, that you're below 5 on corn.
Even with there not being a lot of stored corn out there, there's projection going that far?
I mean, yield is so, I mean, going back and going back to this chart, yield is so important to building stocks. And we're going to talk about a couple other factors in this too that you have to think about. It's not just a domestic issue, but if we grow, a 14 billion bushel crop, we're going to have some corn left over. There's going to be some corn. You're going to see the piles again in the Midwest. Assuming we can move it to market, assuming there's water in the Mississippi, and a lot of other things have to play into it. I mean, you can think of a black swan. We could spend all day talking about black swans. But again, I think there's going to be the acres. The question is, are we going to get a change in this weather pattern? And history tells us that we don't usually have 2 disastrous years in a row. So if you're a betting guy, if you want to continue to bet on drought, you're probably taking long odds. That's just what the numbers and some of this analysis tells us. But we really do have to look offshore, because you looking at exports, United States, big player, bigger than wheat. 40% nearly of the world exports are coming off our shores. Probably about 3/4 out of New Orleans and about 25% out of Portland, Oregon. But you look at Brazil and Argentina combined there, and they're right with us. South America exports as much corn as we do. This was not the case certainly 20 years ago. So they are growing. They are growing fast. They are figuring out, it's a green revolution. They are figuring out how to grow good corn. They are using technology. They're learning from us. American agribusiness is down there showing them how to do it and investing. And you've got Ukraine there, which, I mean, that really surprised me. They have 11% of the corn export market. So we got to pay attention to them. Right now, of course, they're on opposite seasons. So if you look south, look to the southern hemisphere, a place like Australia, they just had a wheat harvest. So, and what didn't happen for them was that when they were trying to fill that grain in October, they had no moisture. So that's why they lost 25-26% of their crop. Look at Argentina. They're pollinating right now. They got it in a little late. It was moist. They've seem to have good moisture. It's warming up like it would for us in our July. They're going to start filling that grain. They got lots of acres. So does Brazil. Brazil grows a second crop of corn. By all accounts, their crop's looking good. But we got to pay attention, because if they get crazy hot weather during pollination, it affects them just like it does us. Doesn't matter. If you get 110 degrees, it doesn't matter if you have water. That corn is not going to fill to the tip of the ear. And so we got to keep an eye on their crop calendar. So we're going to know pretty soon on Argentina whether they're going to have a decent crop, and I wouldn't bet against it. It doesn't look too bad right now. I can't not talk about China. They're not exporters. They don't export wheat or corn. But it's amazing to recognize how much they grow. Only the United States grows more corn than China. They need it. They consume it. They are trying to grow protein to feed their population. And you look at this chart here below. I mean, look at the growth in their corn crop, in their yield, in their acres. They haven't had a bad crop. They're growing acres. They're becoming more productive. They have a huge swath over everything from, the northern reaches down to these subtropical areas. So they're growing in a lot of different regions, and I think it gives them a lot of flexibility. But they have the potential to be, I guess, a black swan. And it's just an interesting, in a normal year, they will maybe import 1 million metric tons into China. Last year, they imported over 5. Now, they did not have a short crop, but they looked across over here and they saw our trouble, and they got into the market and they bought corn. And as you know, they can buy with a vengeance. They have the money, they have the resources. And they didn't just buy from us, they bought from Argentina and Brazil. But they bought 5 million metric tons. They hadn't done that. Again, for them to hit 1 million metric tons on the imports. So now they have a lot of corn on hand. They're probably going to feed it to pigs and increase their protein. I'm very interested in what they're going to do now. Are they going to be active players this next year? Was this a one-time event? What's going to happen if they actually do have a crop failure over there? Again, something we got to keep an eye on. If you're a student and you want to learn Mandarin Chinese and get into agribusiness and trade, you probably have an opportunity just helping the U.S. industry understand what's going on in China. Because it's better than the Ukraine, but it's still not very good information. And they are a heavyweight. They can move markets in a matter of days or weeks. Again, we'll look at this last chart on corn, and then I'll switch over to beef, to cattle. So it's a little different here. We don't have a trend line. Dan O'Brien did this one again out of K-State. He does great work. You see the stalks in the bottom, sort of gets at one of the questions about corn stalks. Obviously, the relationship he's trying to represent here is that when we have big stalks, the blue lines are tall, corn price is down, and when we have very little corn on hand, I mean, this 5% of use on hand is considered pipeline. So that's basically enough to keep the barges moving. So we're down there. We're very low right now. And I guess what I would point out here is a little different. And again, these are average annual prices in the United States. Is what's happening at the top when you do have a spike, and it really is a spike. And then you have it's different than the wheat chart over time, historically. That tells me something. That's something I'm paying attention to. We've obviously had a very good run up here due to demand issues, those weren't all dry years. We had good demand. We had ethanol starting down here. The ethanol really took off, and then we've had a bit under corn. So the question is, what's going to happen now? This market year, they're saying the average annual price $7.40 a bushel. I think that's probably going to come true. Something to keep in mind. Where's the next dot going to be? That's the question if you need to manage risk, and then think back to that December 13 contract. Yes, sir.
You don't take into account the devaluation of the dollar from 2008 to today. How much does that change that?
I don't know, but that's a very important issue.
It's like 40% is the devaluation in the last 4 or 5 years.
Of course, to you, is there any difference?
Is there any difference?
I mean, that's an interest. I mean, I actually do a talk on exchange rates, and it's interesting to us. I mean, if you have to buy corn to feed cattle, the difference between buying, summer of '09, buying, $3.55 corn versus something twice as expensive now. I mean, maybe you're getting twice as much for your cattle. I don't know. Probably not. We'll look at a cattle chart here. You get a little bit more if you're a cow-calf person, but that's very important, because what happens is that if the exchange rate is in someone else's favor, their money's worth more, and it's different for everyone. But yeah, I mean, I can make it a lot cheaper to them. It may be expensive to us because it's at $7.40, but if the yen is more valuable, they buy it. It's no different.
That's why I wondered in China why they bought 5 million.
Well, that's that one-year event that no one seems to want to talk about, and I picked it up off the supply and demand tables, and I know why they did it. They saw our crop going in the tank, and they said, you know what, we don't know about ours. It's June. They have the same season as us. Says, we got to get in this market. We got the money. We're just going to buy up every bit of corn we can, and if we have it on hand at the end, and they had a great crop. So now, I mean, everyone assumes, well, they're just going to feed it to pigs. They have all these huge stocks in China. I don't know. I think that's something we've got to keep our eye on. I don't think they'll sell it, but they could. But certainly exchange rates are a big deal. I guess I would say in those last 3 years where you see that doubling almost, or more than doubling on corn price, I don't know that the cost of inputs in the United States has really changed that much. It might have appreciated 10-15% tops, maybe 5%. So I think this is a bid under corn. And again, you look at these stocks. I mean, when we go from 14% down to 5% of our total use, and that's a third. I'm glad you all finished eating, because this story isn't necessarily the rosiest one. It's a tough story, and you probably all know why. But we'll go through the facts. I don't know how much I'm going to be able to project. I'll try and be positive at the end. But there's some things going on in the beef supply chain which we got to take notice of, and changes are coming, I guess. On the demand side, I think our domestic demand is decent. And that's what this would seem to show. I think the retail prices for domestic consumers is an issue that we're going to have to really pay attention to. How much will I pay for my tri-tips? It's a question. And if you ever get a chance, Bridger Fates out of Uinta County with Extension, if some of you know him, he is really good on this. If you can ever get him to give you a talk, he really dives down into the beef demand and foreign. He just does a great job. I think the foreign demand for our beef is excellent because we have the best beef in the world. And if you're in Asia or in Africa or even Europe, they want our product. And we have a good product. It's a healthy product. We don't have any BSE issues. So things like that have passed by. There's good foreign demand for U.S. beef. Certainly we have some feed cost issues. We have some herd liquidation issues. And in the feeder part of the supply chain in the middle, that's it. That's the area where I see the most concern. The evidence is, if you look at the blue line here, this is the cattle cycle. So I think the cycle wanted to rebuild here back, 2004, begin that process of rebuilding the herd. Drought hit, boom, double dip. And we're down here at this 65-year low on the cattle herd, the U.S. cattle herd. That's something we're going to have to deal with. This is I know the number of cows that the cycle itself is probably trending lower, but I call this a double dip. Again, people smarter than me can talk about, some of the intricacies of that. But the good news is that for the cow-calf producer, there's probably been some profitability here in these last 2 or 3 years. There should have been. You had that opportunity. If we look at a couple of charts here, these are continuous charts. We got a monthly chart here on the bottom, and then we'll move up to this. But look here. For many years, going back to 2004 through really 2009, we were in this range, where we had the seasonal up and down, but boy, we were just stuck in that channel between, feeders, futures contract, the type of animal that would go into a feedlot, between $1 up to maybe $1.20. And then here, fall of 2009, we finally caught a bid, and there was this move up in feeder prices, and then I've taken that part and you see it up here. There's a weekly chart that really starts back in 2011. And I'm not a chartist, I'm really not. But that's, I think for the cow-calf operator, that's a favorable chart. You could probably pick it apart. The question for me in this is, are we going to form a new channel like this up here between 140 and 160, for instance? And then are we going to have that seasonal fluctuation in between those two prices for feeder calves, again on a futures contract? And then will that enable producers to manage risk and know that you're going to be in between there? I guess that's what I would look for. I don't know if there's evidence quite yet, but we know what happened a year ago. We had this crazy bid under calves. We had this $2 calves being sold out in eastern Nebraska, and everybody had pasture, and there was going to be this corn crop, and then, boy, that blew up. boy, was that tough, because we didn't end up with all the feed we thought we were going to have. So, but that's what I'm looking for here, is that we're gonna form a new sort of boundary, a new channel where feeder prices will fluctuate. It will be much higher than this old channel. I'm going to jump over the feedlot and go to Packers, because there was some big news last week that big Cargill plant in Plainview, Texas shut down for good, pretty much. That's a big deal. Beef Magazine did a real nice article on it on the 18th. I encourage you to read it. They put out this pie chart. That's about 4% of the packing capacity in the United States is shut down here, I think, in a week. So that's just one of these main operators. I mean, you look at Cargill, Tyson, JBS, and National Beef. You know, they've kind of got most of the market there. If you know, the question is, what's next? What other consolidation is going to happen? Does Tyson need to do something like that? Do they need to close one of their plants to make the rest of them profitable? So we may see some other shoes to drop on this. But, and you see there is a response in the market immediately on fat cattle. I mean, in the 2 or 3 days right after this announcement, the bid left that market. So of course that really takes us back to the guys in the middle who are feeding. And they're not all big feeders. A lot of them are family feeders. You know, they're buying the calves or backgrounded animals from the cow-calf people, and then they're selling to the packers. Well, the packers are presumably going to not need quite as many of those fat cattle now, because they've just cut their capacity. And this was already in play. Whoops. You can see back here placements this last fall, September, October, November. I mean, we're off, you know, 400,000 head from what we had the year before. Here, you know, a couple 100,000. And these are big placement months. These are the placement months for feeders in the fall. That's the way it works. So we're off significantly. You look at Texas, where they've got a whole lot of feedlots. You see that green line? It's way below last year and even below years previous. So, you know, the number of cattle on feed is down because their supply of animals is down. The herd is down. The cow-calf operator is profitable, but they don't have as many calves to sell or to put into backgrounding to then go into the feedlot. So this to me is the part of the cattle sector, the supply chain, that's really it's probably gonna be toughest. I think again, you know, get Bridger in here and he can probably inform you a lot better. I think there's going to be innovation, to be quite honest, and hopefully maybe some of the small producers, some of the small feeders can get in on that innovation quicker, and maybe that's a good thing. I hope it doesn't mean consolidation and that the smaller feeders are going to be shut out. But they're going to have to feed different. They're going to have to substitute different feeds. They're going to have to feed for different, probably shorter times. They're going to have to think about the weight of those animals coming out. We know they're getting bigger, but that doesn't solve this. So it's not exactly a rosy picture in that middle of the supply chain, but I guess I hope that, I mean, this is going to spur innovation, and from that there eventually will be profitability, and again it's those that do innovate that will come out on the other side, and they will be profitable.